Awesome. So yeah, everyone, just welcome to our ninth Broadgate Search Social webinar event. Basically, this evening's topic is Don't Break the Bank, how to protect your business in a high-risk environment. So yeah, what to expect over the next hour is panel discussion based around how you can keep your business protected through high growth or even hyper growth phases. Throughout the evening, as you've probably already seen, there will be polls. There will also be a live Q&A throughout. And we will finish up with a half hour of networking should you wish to continue this conversation further. For those I've never spoken to before, my name is Mike Rogers. I'm a consultant here at Broadgate Search. So between 9 and 5, I support high growth tech-enabled organizations through the provision of interim financial crime and compliance resource. But for this evening, I'm going to be the host and webinar of the host and chair of this webinar. Before I get into introducing our panel tonight, we just need to go through a bit of housekeeping. So throughout this webinar, we will be running a series of polls designed to gain insight into your views, steer the panel discussion, and really just be a basis for talking point throughout the night. So these will pop up on screen for 60 seconds at a time. It would be great to get as much interaction on there as possible. Also, the panel will be answering your questions throughout tonight's webinar as part of our live Q&A. So during the evening, please do type any questions you may have in the box at the bottom of the screen. We will try to get through as many of them as possible, but out of respect for both our panel and our audience, we do not want to overrun. Any questions we don't get to will be covered and answered in the white paper published after this event. I think it's important just to start by touching upon why Broadgate Search organise and run these type of events. Obviously, we are currently unable to network in the ways we used to with a glass of champagne in hand. So I feel like it was more important than ever to provide online forums to ensure you can remain connected with your peers. So this is our ninth Broadgate Search Social webinar. In the past, we've covered topics ranging from DE&I to emergent risks, regulations, and the impact of technology on the financial services. We are always looking to our community and network to understand what they would like to see covered in future events, whether these are podcasts, webinars, or even white papers. So if you're in attendance tonight and you'd be interested in getting involved in a future event or have an idea for a future event, please do, feel free to reach out after this webinar. We are all ears. This evening, though, we'll be focusing on a topic that constantly arises in conversation with my network within the high growth tech-enabled space. It's clear a balancing act exists within firms going through high growth or even hyper growth phases. And the question really is, how can you ensure that your organization remains protected, mitigate risks and sort of ensure compliance without breaking the bank or hindering the overall growth plans of the firm? So just to provide some context, tens of billions of transactions are made in the UK annually. In 2019, this was estimated upwards of £90 trillion in value, increasing year on year. So you can imagine for a growing firm, the issue of identifying examples of financial crime is increasingly becoming like finding a needle in a haystack. So this evening, our panel will discuss a range of topics revolving around the steps you can take to ensure your organization remains protected without breaking the bank. In particular, we'll be discussing the importance of company culture, automation and AI, departmental structuring, and sustainability. This discussion promises to bring about some really engaging conversation, and we really do look forward to continuing it in the networking session afterwards. So, without further ado, I'm just going to let our panel introduce themselves. I'm going to ask them just quickly to provide their name, what they do, and one thing they are looking forward to doing most once lockdown is lifted this month. So, in alphabetical order, can I start with Ash?
Sure. So I'm Ash. I head up our compliance team at iWalker. So anyone not familiar with iWalker, we specialize in lending to small businesses. We operate in the UK and Germany. I've been there for, it's coming up to 4 years now. And what am I most looking forward to doing when lockdown is? We're just meeting up with family in real life, in 3D.
Seems alien to me. It seems alien to me at this point. No, it's crazy. Next up, we've got Emma.
Hi, so I'm Emma. I'm head of fraud and financial crime as well as European compliance at Capital on Tap. We are a business lender, so we have a business credit card as our main product for small businesses across the UK, Spain, and the US. And I've been here about 3 years building out our controls across fraud and AML, getting us ready for globalizing and making sure that we can onboard customers smoothly and safely. I mean, the family answer is a good one, but my selfish answer is I really want to travel. I just miss the sun. So I'm really looking forward to a holiday if and when that becomes a possibility.
Definitely. Same here. Same here. Next up, Gabriel. Oh, I think you're on mute.
I apologize. Yes, I thought it would be better to be on mute, but obviously you want to hear what I have to say. I'm Gabriel. I've got quite a bit of experience, over 20 years, if you believe it or not, working in financial crime, starting with technology, data matching, transaction monitoring, moved to consulting. And I'm enthusiastic a champion of introduction of innovation for the management of financial crime, really. That is so much better now than it used to be, because I started in technology, but it's such a transformation over time. But the challenges are still the same. Also, I covered all kinds of areas of financial crime, risk, AML, contract financing, of course, sanctions, anti-bribery and corruption, anti-tax evasions. Worked with HSBC, Standard Chartered, large financial crime organization in transformation programs, policy development, assurance, financial crime risk assessments, development of governance framework, and KI, MI reporting, all of that. But more recently, I had a keen interest in the FinTech sector, as I can see it as an emerging force in the financial industry. And I work with companies like Debris, for example, like as interim head of financial corporations and heading the financial crime controls and risk management. And I can't wait to do what Emma said she will do, as well. Ash, combine them both if I can, and more.
Amazing, amazing. And ultimately, we've got Matt.
Yeah, thank you, Mike. So Matthew Tataryn, head of financial crime risk at Tide. So I'm responsible for our second line of defence and a number of financial crime teams. I've been with Tide for nearly 2 years now. So it's started with a very small team, 5 analysts tucked away in a back office in London, and now looking after a team of, just over 70 individuals across 3 operational sites. So the topic of hypergrowth has been one that we've been involved in over the last 2 years, which has been, really exciting. We're currently also going through a sort of internationalization of now launching into a different jurisdiction, which again is going to take that growth platform into a new direction, which is going to be really interesting of what, pressures and strains that puts onto the operation that we've built over the last 2 years. So really exciting time, and, something that is hopefully going to be really relevant to the topic we're discussing today. Again, selfishly, like Emma, I think mine is more so on what I want to do rather than seeing everybody else. For some miracle, my football club has made it into the Championship playoffs, so I'm a Barnsley fan. And if anyone has heard of Barnsley, you'll know that we're normally fighting for relegation, not promotion. So we're into the playoffs, and hopefully, all permitting, I'll be able to attend and watch us join the mass ranks in the Premier League. So fingers crossed for a more successful 2021 than it's been in 2020 for my sad football team.
I really hope there's no Swansea fans on this call. Finally, last but not least, we have Shay.
On mute there. Hi everyone, my name's Shay. I'm the head of financial crime prevention at Curve. Curve is an app that allows you to add multiple cards in one place, so you can manage all your money in one space. You can also have a physical card as well if you want. We are available in the UK and the EEA, and we have plans currently to expand to the US as well. So lots of growth, lots of expansion there. Really exciting time. What am I looking forward to? To be honest, the same thing as what everyone said. I just want to travel. I love to travel. So not being able to travel for the past however long has really been getting to me. So yeah, I'm just going to find myself at the airport. Don't know where I'm going yet, but I'll be there. I'll be at the airport.
Amazing. Awesome. Thank you guys. Yeah, the first the first topic we'll be covering tonight is all around sort of company culture. Sort of how do you create a culture of compliance in your organization? Often the big allure of FinTech is that processes are quicker, more user-friendly than traditional financial structures. So with that in mind, what sort of challenges can a high-growth business expect to face culturally? as we look to sort of sustainably grow? I'll go to Emma for this one, please.
So I think for all businesses, obviously driving revenue, growing the business is important, but I think we feel it the most, obviously, if you're in a younger or particularly high growth business. So I think the first thing is definitely that challenge between, is compliance being seen as a blocker in the business? Is it seen as a way to, or something that's going to prevent the growth of the business? So I think for us, the biggest thing that we've needed to do to create a compliance culture in the organization is to really work with the business to understand what the drivers are and how we can kind of work in partnership more than coming along at the last minute saying, no, you can't do that. We've, over the last few years, really been building a culture where, the business is bought into the need for compliance, have an understanding of what the considerations might need to be. And so we try and take an approach where we're not telling the business what we can and can't do. We're working with the business to say, okay, well, where do we want to go with the product? What do we want to do from a revenue growth point of view? And how do we put kind of safe rules around that in a way that kind of works on both sides? But I think we feel that challenge more acutely in a high growth business, although it's obviously present everywhere.
Definitely. And Matt, just in my conversation with senior professionals in the space, some people refer to sort of compliance as being viewed as the department that says no to things. So, in your experience, what steps can financial crime and compliance professionals take to sort of achieve buy-in from senior management within their organisations?
Yeah, I think that's often the case, right? Of, we're seen as the people in the corner who are always going to bring the bad news. It's like the Grim Reaper stood on everyone's shoulder when compliance gets involved in any areas. And I think, it's totally the opposite case when you sat on the other side of the fence. You want everybody's buying and you want everybody's support, because that really allows you to make decisions quicker, which, as Emma mentioned, is something in fintechs that we pride ourselves on, is, being able to make those changes in a more dynamic way. I think for me, two things which are really important are transparency and engagement. And I think this comes at, every level, focusing on even the individuals who are sort of entry within the business, and also your senior stakeholders of them, making them aware of, what the purpose of compliance is. It's there as a protection and a facilitation for things to be successful, rather than, a blocker to stop things from growing. And, if you can build a strong and transparent framework of where everyone is aware of when they need to engage and why they're doing that, it hopefully allows you to get to the point where you're having those conversations that could cause blockers a lot sooner rather than later. The last thing you want is to get to the final stages of a product launch and, not have had that conversation with a certain risk owner, and suddenly you're back at square one, and, you've wasted everybody's time and effort in trying to get something over the line. So, just educating individuals when they join the business of the importance of, what your first, second and third line are going to do, and, how to engage them in certain ways, and just be open and honest with the things that you're working on. I think for me, when I started my career, understanding, what compliance did and the world that sort of operated in was, a mystery. And until I sort of peeked behind the door and realized what was there and sort of got involved in it, I started to understand that, it's there from a protection perspective, not a frustration perspective. So, I think that transparency and engagement is a key way to drive that.
Ash, if I come to you, is that something you would echo in terms of what steps have you taken at iWalker to ensure that culture of compliance?
Yeah, I can definitely echo this. I've always found it interesting that there seems to be a disconnect between what compliance think they're there to do and what the rest of the business think they're there to do. But that's usually the case where the business is very young and it doesn't have its own compliance function. So I'm just talking from the perspective of somebody who joined as the very first compliance hire. So we did have to have these conversations and to explain that compliance is basically just to get the point across. I believe it's in compliance as an enabler. We're not there as a business prevention police, to use a classic term, but I think one thing that Emma and Matt touched on is the fact that compliance performs best when we're involved right from the beginning. And I've got kind of a number of case studies which I use within the business to try and make this point. Part of this disconnect comes from the fact that they might not understand what compliance need to advise on and what they don't need to advise on, or what they should be involved in and what they should be, and then what they shouldn't be involved in. And you don't want to get to kind of when you're ready to launch, hey, compliance, can you sign this off? And you're like, oh, hang on, have you thought about this? We're there to bring those risks to light right at the beginning, so you can think about it as you're developing the new product or the new kind of acquisition channel or whatever it is you're going through. And yeah, to echo what Matt said, we're ultimately there to protect the business. And I think a very important thing to win their buy-in is to be able to have a good risk radar. It will become very apparent if you are taking a very conservative approach, or you're de-risking to the nth degree, or it's simply a case of, well, this is how it was done at, where I've worked before. Senior management are really looking for somebody who can help them make informed decisions about the risks that they're going to take, and this is where this part of the role that compliance plays.
Awesome, brilliant. Thank you, Ash. Thank you, Ash. Shay, anything to add to Matthew and Ash's points?
No, I think I pretty much echo what everyone's already said. I think it is really important to engage senior leadership in these discussions and making them understand kind of what the risks are, and not kind of going to them at the very last minute, but kind of keeping them involved all the way through. I think once you kind of have that ongoing sort of discussion there, then it's quite clear what the expectations are, and having a clear process as well within the organization of how you go about these things. So, for example, something that we have internally, before certain decisions are made, for new features might go out, the process got to be going through, you've got different areas that need to sign things off, etc. So that way it kind of just, the entire organization along with senior leadership really understand what the parts of risk need to be played.
Oh, thank you. Gabriel, if we come across to you, you mentioned at the start, you sort of recently shifted into the fintech space. From your experience, have you noticed a difference in attitudes towards financial crime and compliance from senior management between fintech and traditional banking structures?
Yeah, first of all, yes, of course, I echo all my my colleagues here. And I think one of the key points, one, we inform the senior management. We need to see from the senior management the tone from the top to give that kind of guidance, because that's what leadership is all about, right? They're very good in setting up kind of providing proper leadership in terms of revenues, sales, and so on. They need to take ownership of the risk. While they take ownership of the risk and give a proper tone from the top, then will be echoed into organization, improve the culture. To answer the other questions you had, basically, yes, there is a difference. And I think the difference is, just bear in mind that banks are still struggling even now, to implement proper kind of smooth kind of financial crime frameworks for over 10, 15 years in real terms. They went through the maybe third round of enhancements. They spent billions of pounds. And I think within the banking sector, there is quite an enhanced perception in terms of ownership of financial crime risk now. Bear in mind that it has changed in the last probably 5 years. As even before, the business didn't really take ownership of financial crime the way it should have done. Now, the other thing is a shift between looking at the effectiveness of processes, because they went through so many transformation, reiteration of improvements on technology, implemented technology, new target operating models, you name them, right? And actually looking at, is this sustainable? Can we sustain this framework we have built? So they're looking at improving the efficiency now. Actually, some of the banks, they specifically setting up programs to look at how they can improve the efficiency of the processes. And again, the cultural change within the banking sector has changed dramatically compared with years ago. So the business understand they own the risk. They understand they have to do better, and actually they're looking at how they can benefit from that. They create a competitive advantage. In the fintech sector, I haven't seen a lot as yet, but from what I've seen so far, is a little bit of beginning to understand that they have to basically run your business in an increasingly regulated market. And there are lots of assumptions being made, especially by senior management. Well, we're not in a high risk business. We don't have high risk products, but they don't do a proper risk assessment to base that on facts, not assumptions. Assumptions are dangerous in financial crime. You need to base on facts. You need to understand the risk so you can take commensurate measures to manage that risk. And again, the focus is on pure growth, obviously, and that transpired. Some of the fintechs, they build up a huge customer base, which is great, but then they realize that with a huge customer base comes a significant risk, and how are we going to manage that risk? So is a lot of learning, and it's going to be a lot of firefighting before implementing proper governance, before implementing proper prevention measures in terms of not only covering anti-money laundering and sanction screening, but also anti-bribery and corruption, anti-tax evasion, which I haven't seen much being done in the fintech as yet. So I'm optimistic because it's an opportunity for fintechs to get it right. Okay, learning from experience from the banks, which they paid fines and so on, and less firefighting, more planning.
Awesome. Thank you, Gabriel. Thank you. Another sort of, I feel like when we talk about this topic of financial crime and when it's related to expenditure, the topics of automation always come up, the benefits. We've got a poll for this one, which will come on screen now. Obviously, it'd be naive to say that the only benefit of automation and AI is simply the financial crime perspective. So we've got a poll up on screen. What is the greatest benefit of the use of AI technology in the fintech space? This was a bit different to the first one. There's no right or wrong answer, just purely opinion based. So options we have for you: fraud detection, claims management, lower operational costs, data-driven management, virtual financial assistant, predictive analytics, automated customer support, and robust verification and identification processes. I'll just take this time, just ask the panel, in terms of these, I believe the wrong polls on screen. Apologies for that. Just in terms of automation AI, how much the benefits to you is considered sort of fraud detection rather than lower operational costs it brings?
I think it's interesting, right? We talk about automation and AI all the time. They're like the buzzwords at the moment, right? Of what can we automate? How can we use MI? Where's machine learning in all of these elements? And I think actually when it comes into the point of what Gabriel was saying of, more planning rather than firefighting, I think it's interesting to understand where as an organization you want those things to sit. Artificial intelligence and automation is something that is obviously hopefully going to reduce the sort of risk from a manual errors perspective, where you've got decisioning that is rather simplified. You can make that a lot quicker and be clear that the tools and the systems you're using are going to make the right decision. I think it's important with all of those areas to look at it of where that sits in your roadmap as, a developmental side of where you're going as an organization from a compliance perspective and putting them in at the right point. So where you feel comfortable that you're happy with the data and the information you're inputting into that system to make, an educated and informed decision, rather than just thinking, if we automate that, we can save X, Y, and Z. And look, there's always a toss-up, going back to the question about culture, as we spoke of, the costs of compliance departments and, the balance between the value that you're investing in risk areas compared to other areas that are driving revenue for a business. It's always challenging. And I think that's why you should, look at the roadmap rather than just what's in front of you of we must automate and we must use artificial intelligence. I think there are certain areas where this can be really effective. Like I say, on simplified decisions, it's very good to use these sorts of tools rather than, on the more complex areas and things that are really used to reduce risk based on the decision of, the specialists you have in place. That there's no replacement for understanding of financial crime and strong investigation for what you're looking into. So I think it's a balancing act. Automation is certainly something that I think is more adapted than artificial intelligence at the moment. I think, artificial intelligence and machine learning is being played with, and everyone is having their own idea of how they're going to use it, but we're not quite there yet as a sort of formalized approach of what this all looks like in a compliance sphere.
Completely. Thank you, Matthew. Thank you. And yeah, we've got the results back from the poll. Predictive analytics coming back as the greatest benefit of the use of AI in the fintech space. Ash, does that come as a shock to you that it's trumped, fraud detection, automated customer support, and other areas?
No, not at all. I think I would have said fraud detection and onboarding as well. I expect that machine learning or AI, so to speak, will always be part of a suite of financial crime controls, rather than replacing something that's already there. I think it definitely has a part to play in fraud detection. And it's also worth mentioning, though, when we're talking about machine learning, it's not always things that have to be developed in-house. So there are third-party platforms. For example, we've just started using threat metrics, if anyone's familiar with that. So, and the good thing about third-party platforms, right? I mean, one is the cost of implementation. You're literally just building an integration. Two, they're working off a much larger data set than you might have when they're training their models. And yeah, so it uses things like device ID, location, to allow us to, which we can feed into our risk score. And automation, is something we're always looking to do, and it's not always driven by cost or the resource that's involved. Sometimes, in my experience, it's driven by trying to remove the risk of human error. So as a lender, our main fraud risk comes from impersonation and document fraud. So people falsifying documents that are used in the credit assessment, or which we use to verify the funding account. And that's where we've introduced some more automation over time, because we add manual processes. You can hire the smartest people in the world, but the smartest fraudsters in the world can still trick them. So sometimes we look also at removing that risk of human error rather than just looking at where there's cost and resource involved.
Really awesome. And if I go to Emma next, Emma, how important has automation been in Capital on Tap for dealing with that hyper growth phase that it is going through at the moment? How much how have you handled your automation?
Yeah, I'd say that's been hugely important to us. I agree with the poll. I think AI has huge value from the predictive point of view, but actually outside of AI, just that automation has been hugely important to us from the beginning. We were lucky that we, had a CEO, a leadership team, and a tech team that were very bought into doing clever things with data and automation from the early days. So I guess to echo kind of what Ash is saying around third-party vendors, we've looked at, what's that balance between building in-house, but then maybe layering in, a combination of third parties to really protect us from all the different types of financial crime or fraud that we might see. I think using that in clever ways, there's obviously the element that Ash touched on around, removing human error. But I think for us, it's allowed us to scale so much more quickly. Not having to staff up a team every time there's, a revenue driving opportunity. I think that would have come with its own challenges that we would have felt a lot more. Having the automation there and ready for us means that when we do need to scale up or when we're going through a busy period, we have the ability to do that quickly. We don't have to slow down the customer journey. We don't have to impact on our ability to service our customers, onboard new customers. So we've kind of from the very beginning always looked at what can we automate? How can we automate this in the cleverest way possible to protect us? And that's kind of what's been a huge driver of our growth.
Awesome, thank you. And Shay, how does Curve's approach to automation compare to that of, as Emma's just said, about Capital on Tap?
So automation is actually one of our key leadership principles. So one of our leadership principles is automate to accelerate. So across the entire business, we're always looking at how can we automate things, what can we do? And I suppose from my department's perspective, a lot of the automation that I'm looking at is their actual tasks, the processes, the procedures. What can we automate there? What can we do to save time so that we're not spending too much time on some of our operating procedures that we could be using fighting crime? So for me, when I think of automation, that's kind of how I'm looking at it. I'm looking at it as what kind of tasks can we automate here? What kind of workflow solutions can we put in? That's sort of where I sort of stand on the automation piece.
Awesome. Thank you, Shay. Thank you. Gabriel, when it comes to sort of identifying the areas of financial crime which should or could be automated to cut costs, what sort of processes and thinking goes behind that? What approach would you take?
So I think the what I've seen before and what I think is right is just look at the scalability, because obviously you cannot manage volumes without automation. As a principle, for example, the payment screening, you have to be automated. And actually, it's a reg requirement for that as well, to automate payment screening. It's a good reason for that. And actually combines all the areas that have been covered already, avoiding human error, consistency of the processes. So you repeat the same process again and again consistently, right? And managing volumes. But also, I think an area which everybody needs to be aware, I'm pretty sure, is, to automate stuff, you need to have processes to automate, right? So you need to set up the processes, the governance around the financial crime, and the processes and the controls in place. So then you know what to automate and where you can save in terms of money, also to speed up processes, also to provide that consistency. So I think they go hand in hand. And sometimes automation doesn't make sense because of the low volume, and it's actually too costly to automate those processes. But generally speaking, you need to look at the existing processes and see what you can automate and how. And actually, the end of the day comes, it's all about money, right? So how can you save money? How can you improve customer experience? Improving customer experience generates more revenue. And that is something the senior executive management like to hear.
Yeah, thank you, Gabriel. Thank you. Matthew, if I come to you, moving forwards, what do you view the role of artificial intelligence, but also machine learning, as we mentioned previously? What do you sort of see that role being within financial crime departments within this space in the future? Not just at Tide, but sort of the entire field.
Yeah, I think it's just going to help us build for stability, right? And I think as Gabriel mentioned, there's some key drivers that are going to come from senior leaders, that as compliance professionals, whether we want to hear them or not, are going to be there on a day-to-day basis. So, we kind of need to swallow the pill and just deal with it rather than think of always the risk elements. But it's a combination of both. And look, as senior leaders in the business, we're bought into that just as much as anyone else, of understanding, how the organization is going to continue to build. And a big thing for fintechs is having everybody on the same playing field of where you're going to go as an organization. And machine learning and artificial intelligence is going to be used across multiple different areas within your organization. It's not just going to be in your risk departments, and it's how you can utilize that to the best of your ability to give you that structure and foundation that as you grow and as you expand, you can continue to focus on the things that are important. You want to be looking at how you reduce risk and how you stay compliant and spending your time and resource, which is valuable to you, in the key areas. So if you've got repetitive operational tasks, rather than having, a team of 50, 60 analysts working through those, if you can break that down into much smaller areas and, use your very valuable resource in the areas of reducing risk and understanding, your bigger typologies. I think that's where, machine learning and artificial intelligence is going to play a really important role. And also giving us the edge of potentially getting in front of some of the trends. In fintechs, we all see some very similar things, but at very different times. Something that affects Tide is most likely to affect, IWOC, Curve, or Capital on Tap very soon. And if there's the synthetic data sets or other things that the machine learning model can learn from that help us support each other in the network, then that I think will be really valuable, of how we come together to support each other. The criminals are all fighting together against us one by one, so we want to stand together as a unit to stop them within that field.
Awesome. Thank you, Matthew. And Shay, you mentioned Curve. At Curve, automation is one of the leading principles. with one view on the future at Curve, what do you see sort of automation, the role of automation and AI playing in the future?
Definitely around sort of transaction monitoring. So transaction monitoring, whether it's looking at the way our customers are actually using Curve, and using that information to kind of understand what our fraudulent patterns and behaviors look like. So yeah, definitely a lot of stuff around transaction monitoring, I would say, for Curve.
Awesome, brilliant. And Ash, what new opportunities for financial crime professionals do you think the role of AI and increased automation and machine learning will create in the future?
In terms of opportunities, well, I think it's going to bring, I think it will mean that data science is going to play a much bigger role in financial crime. So there's opportunities to upskill in that sense. I mean, it's not we talk about it's also going to be able to make sure that their investigations are much more targeted. Automation doesn't always kind of remove the need for people. Shay pointed out things like machine learning. Is very good for spotting suspicious activity. Less so for investigating suspicious activity. It can reduce false positives, but it just means that people can dedicate their time and resources to accounts that have not been flagged because they didn't need to be. So yeah, I think in terms of opportunities, I think the role that data science plays in this it's just going to increase. So the opportunities are there to get much more involved in quantitative models. Because it was mentioned earlier, I can't remember who mentioned it, but there's also, you have to also think about the fact that you have to be able to explain these the way these controls work to the regulator, especially from an AML perspective. You want to be able to explain why your transaction monitoring system works in the way it does. And for anyone that's subject to PSD2, it's the same for your fraud controls, for your payment fraud. So, yeah.
Awesome. Thank you. Yeah, Gabriel, do you anything to add to Ash's point about sort of the new opportunities that the AI would create for financial crime and financial crime professionals?
Again, I fully agree with all of you guys, and I can't not be in agreement. Yes, I think the artificial intelligence will. We all talk about the big data, right? And we have a huge pool of data, and actually, it's going to increase the pool of data we're actually using. I think the artificial intelligence will have the advantage of filtering and actually understanding data in a different way than we currently do, and bringing up additional potential risks, for example, we probably haven't seen or haven't noticed before. But again, I think we'll work in conjunction with the people. So the people, Josh's point is, we're going to have more time, really, to invest in proper investigation, to focus our teams in dealing with complex cases, instead of doing the routine filtering or false positives all day long, which I know is a huge issue, generally speaking, in terms of managing that. So refocusing and targeting knowledge and proper decision-making process from people, which they experience and the growing experience in dealing with complex cases.
Oh, thank you, Gabriel. Thank you. If we turn our attention to focus on sort of team structure and resourcing, I believe we have a poll for this one as well. This poll should pop up on screen just a couple of seconds. But according to LexisNexis Risk Solutions, what percentage of the annual $180 billion spent on financial crime is attributed to labor costs? So, this one is either A, 22%. B, 77%, or C, 57%. That should pop up on the screen in just a second. Emma, what are your thoughts on this one? Do you want to stick your neck out and have a guess?
It's a difficult one. So I think I'd go somewhere middle of the road because I think it depends on the organization, right? Like I think Gabriel was saying earlier, traditional banks maybe are more in the model of having bigger teams and, more governance structures and all the rest of it. And so your spend is probably going to be much higher on staffing there. We're talking about in the fintech space that we're all kind of investing a lot more quickly, I would say, in automation and trying to sort of future proof with sort of clever automation builds. So I'd actually imagine that depending on the sector, this might skew. I think we probably, I would assume the fintech space is spending a lot less potentially than the traditional banking sector on staffing costs.
Very true, very true. Thank you, Anna. Thank you. Matt, Matthew, if we come to you, what are the greatest challenges that organisations in the fintech space face when resourcing new talent at the moment?
Yeah, I think it's, finding the person that fits is always interesting. But I think that the challenge is where you are as a fintech. That fintechs are all at different paces in their journey, and they all need different people at different times. When we talk about compliance functions for fintechs, Tide are a fintech, and we're now a compliance function of 70 plus individuals. That there's other fintechs who started months ago who are spaces of 5-10 people of when we first begun. So it's very much about where you are in your journey and finding the right person that fits. For me, I think it's really valuable to have somebody who can give you longevity and structure for a prolonged period of time, and allow them to build and grow a space. It's going back to some horrible analogies about sport. It's a little bit like a football club. You see so many times in fintechs people come in so quickly and move out just because not they couldn't do the role, but they just weren't suited to where the company was at that stage and how that fits their skill sets. Everyone has this sort of wonderful belief that fintechs move so quick and you have all this power to make decisions and everything moves at the speed of light, which it really does. But sometimes you don't always want that if you've been in an environment where it's been longer and takes a lot more things to go through from an ownership perspective. So I think for me it's just about finding the right people for where you are at your stage in your business and what that role is you're looking to cover. Are you trying to find somebody to come in and fix your issues, or are you trying to find somebody to come in and build your team from nothing? So it's really about just aligning on exactly what you need from those individuals, and those requirements become quite niche. I think that's sometimes why it's quite hard to find certainly more senior individuals, certainly as well at the cost that you want to pay for those.
Brilliant. Ash, Matthew's mentioned sort of making sure you get the individuals to the right stage of your journey. What sort of approach do you take when bringing new people on to take IWOCA and the compliance function forward?
Well, a key thing for me is making, part of this understanding of what resource you need is making sure there's that clear split between what the first line and the second line are actually doing. That's one of the challenges I've had. In my time here, it can become quite blended, and that's a feature, I think, of a fast-growing fintech where everyone tries to kind of muck in and kind of help out where they can. So we try to, in terms of making sure, it's well resourced. Part of it is making sure that you have other stakeholders in the business that are on board. So I'll give you an example. We don't have a dedicated KYC team as such. We have a team of kind of account managers, and a lot of the KYC responsibility falls onto them. Now, when you have a structure like that, you have to make sure that you have to manage conflicts of interest properly, so that managing financial crime risk is taken into account in terms of performance, and you've got monitoring in place to see that gets done properly, and also training. It's very easy, if you don't have that structure, to think that financial crime is the responsibility of the financial crime team. It's simply not, and people need to understand. I remember, because I've been through a few organizations, and I've sat and done financial crime training myself. The mandatory, ticker box e-learning module, and a lot of it is focused on the trouble that you can get into. This is what could happen to you if you spot suspicious activity and you don't report it to the MLRO. There's less focus on actually what they should be looking out for. So that's why we developed some training in-house rather than rely on the off-the-shelf models. Say, okay, this is iWalker's product. This is how this is how customers use our products. So they understand what suspicious activity is. It's more, it goes beyond just knowing that they have to report things, because what you find in most organizations is that they have no idea. We have no idea what they're supposed to report. So I don't know if that directly answered your question about resource, because I do try to bring in other stakeholders and other teams. You can call it palming off, but I probably wouldn't call it that. That's the approach that we take.
Oh, thank you, Ash. Thank you.
Hence the small financial crime team we have.
Yeah, Shay, if I come over to you, with so many new entrants, within the fintech space requiring financial crime resource, how do you compete? How do you make sure you're competing effectively for resource within such a competitive environment?
Good question. I think it's about identifying that it's not just about salary anymore. I think, there's so much brilliant talent out there in the financial crime space. And if you want to attract that talent, then you need to kind of show what benefits there are for them for coming on board to your organization. And there's so many like brilliant fintechs out there that have all these shiny, fun, exciting products, and everyone wants to get involved. But when it comes down to it, I think it's about showing that candidate what you can bring to the table for them. So approach I personally like to take is kind of getting them to understand how they're going to be able to grow joining this department, what the department looks like, what it's currently structured like, what the growth opportunities are, what kind of things that we do to kind of support their growth. So, whether it's a learning budget for them to do courses, or whether it's, opportunities to shadow different areas, whatever it is, it's really for me about making sure that they know that they're doing us, they're coming on board to us, and we're getting something out of them and their service, but they're also getting something out of us as well, making sure that it's a very two-way exchange. So I think it's just about showing what you can do to help grow and build that individual, as opposed to just thinking, oh yeah, we might offer this great salary and that's it. It's got to be a lot more than that. You've got to really, really push for that talent, and you've got to show a lot more than just a good salary, I think.
Completely. And I'm very cautious of time. We're into the last 10 minutes, so I'm going to sort of combine sort of the sustainability section and also the resourcing. So Emma, Shay mentioned sort of it's more than just about salary. How do you sort of go about a Capital on Tap ensuring sort of a sustainable workforce when sort of resourcing and structuring your team?
I think I fully agree with Shay on that. I think as we've grown, we've realized increasingly how important that is to grow a sustainable business. We've got a very dedicated head of people and management team that really want to help us grow, progression plans for our teams, help us work out how we can get the most out of our teams. I'd also say a lot of us in the fintech space, we are fortunate, Capital on Tap is very fortunate to be a profitable fintech. That in itself just creates so many opportunities for staff. We've been able to expand in the last year during a pandemic. So we've been in a very fortunate position that we're able to kind of work with staff and say, okay, where do you want to go with your career, and what opportunities can we bring to you? I think it has to be a two-way thing. It can't just be, the business is getting work out of you, we're paying you a salary. That's no longer enough. And so it has to be a two-way thing where we work out, okay, what else are you trying to get out of your role? What opportunities in other teams, as Shay's saying, where can we help you get to with our growth? And that's kind of how I think that model is really how we retain a happy workforce.
Awesome. Matthew, if I come to you, how do you do it at Tide? How do you make sure that you're keeping sort of sustaining that sort of employee when competition for top talent within this space is so high?
Yeah, I think it's about giving people the understanding of where they're going to go in their career, and how Tide supports that, with learning and development and also opportunities. For me, a massive piece of, how you can be successful as a fintech is retaining, your top talent and making sure you're keeping hold and allowing those people to grow. That, there's nothing more valuable than someone in a fintech who's been with you through different roles and through different growths and iterations of changes that you've made. We've all spoken about how quick things change. So, having people there who've been through multiple different layers and levels of changes within the organization is, to me, a massive benefit. And you have to treat people as people. Don't treat them as roles. As you grow, I think there's more emphasis placed on different titles of what you want that space to deliver, and what you want from an individual who's maintaining that role. not everybody's always perfectly ready for their next step, but in 3 to 6 months time, if you give them the development, they'll be there and they'll deliver more than you would have expected. So it's about trusting in that individual, giving them an opportunity, and listening to what they want. A lot of people join fintechs because of the buzz and the buy-in to the company that they're joining, rather than just seeing a number or sort of a name of an organization on a piece of paper. And I think that's really valuable to make sure you don't lose sight of. If you speak to hopefully a lot of people in my team, you cut them open, they bleed blue, and that's because they're invested in Tide and the values that we have as an organization, not what they get paid on a monthly basis. And hopefully as well, you had further conversations with them, they'd all have an understanding of where they fit in their current role and the benefit they're bringing to the organization, and where they're going to go. And I think sometimes, where they're going to go may not be, with you instantly. And there may be a time where you have to say, look, we can't provide those opportunities at that stage, but do it in a positive way. So you're not burning bridges, you're leaving the door open for when things do become right, because, it's a small world in the fintech space, and people move around very quickly. And like I say, timing is very important for a lot of those things. It's about tying it all together so that everybody's clear where they fit in that roadmap and when their time is to do those certain things.
Completely awesome, thank you. And Gabriel, your experience lends itself more so to the project side and sort of the remediation side than the BAU. So how does the approach to acquiring talent and sort of bringing in talent for project work differ to that in the business as usual?
Yeah, I think to Matt's point, timing is very important, because sometimes what I've seen in joining different organizations, different stages of change and so on, different jurisdiction, even different countries, it needs to be a pretty good cultural fit as well, right? So you need to join the organization and actually understand what they're all about, because I know this fintech is a kind of disruptor, right? It's a business, but you don't want a disruptor in your business joining in when things are building up, teams are building up, people are pulling the same direction. And I think to Ash's point as well about training and everything else, yes, generic training is good, but coaching works very well. And it's a small organization, you can still do coaching, right? Sit down with somebody, coach him properly, and you'll find out that it's going to be a lot easier to learn from you and actually see some dedication from the manager in investing time in that person. And you're going to make it, you're going to retain that person as well in that way. I mean, this is talking about small organization. And also, I think, sometimes you might want to bring external resources as well, somebody with a completely different, or not completely different, but slightly different vision or view to share your vision and to enhance that vision moving forward. Because otherwise you're going to get stuck in a, this is our little club, we're building up, but you lose sight of, how other people do things as well. So bring external expertise as well when the time is right.
Brilliant, awesome, thank you, Gabriel, thank you. Yeah, very cautious time, I've only got 2 minutes left, so I'm just going to bring it over to Ash for just one final question. You mentioned sort of the importance of understanding, a business understanding their risk profile. How best would you advise sort of startups and pre-funding firms to ensure that they truly understand their risk profile? If I could ask you to keep your answer concise.
Yeah, sure. I mean, at the risk of sounding completely obvious, I think the very first place to start is, is asking the question, how will our product actually be used to launder money? And this is why it's important to understand the various risk models. I'll talk about, I work as a lender. If you're primarily a lender, you're not offering credit cards, you're not in the payment space, then, you can still be used, your product can still be used to launder money, but it's more likely to be in the layering stage. So it's got a very different risk profile for money laundering to, say, a payments firm. But on the flip side, we're probably more exposed to terrorist financing. So we have to take that into account when we're onboarding. How do with adverse media and the filters that we're using, what kind of things should we be looking out for? Next thing, what's your customer demographic? Are you serving customers just in the UK, the EU, globally? Is it individuals? Is it businesses? If you're serving, if your customer base is just corporate entities or businesses, you could still be exposed to other jurisdictions anyway through shareholdings, directorships, and so forth. So this is the kind of thing that you would want to take into account in your risk scoring. If there's a UBO in a high risk jurisdiction, how do we treat this? And the reason I'm kind of moving from the risk assessment to what it means for controls, because that's the purpose of the risk assessment. You conduct that risk assessment in order to say, okay, what kind of controls do we need, and what do we think is appropriate? And also scrutinize the characteristics of your product. What are the features? Is it, if we're talking about the lending space again, I'm going to, because that's where we're operating. Is it a flexible facility? Where customer can kind of put money, where you expect regular drawdowns, regular repayments, or do you have a charging structure that almost forces a customer to commit, in a sense? One product will be less attractive to somebody trying to launder funds than another. So that's the kind of thing that you want to go into the risk assessment. So from there you can see, and also what, do we do automated credit decisions? That's criminals will target firms that they know have less human oversight. If they know there's a limit where they can borrow up to a certain amount, in the case, I know a human isn't going to look at my application or ask to see bank statements or things like this. That's something to take into account in the risk assessment, and that's where you target your controls or your transaction monitoring if you want to do enhanced monitoring on these particular accounts. So it's kind of taking everything together. There is obviously a I can imagine anyone within the business would want to be able to say, oh, this, we see ourselves as low risk. And then when you start to scrutinize it and you try to explain why you're low risk, you find that, okay, there are holes. But this is not to say, it's not so much to say, well, it's a high risk business, a low risk business. The risk assessment is there for you to be able to say, okay, this is where I'm going to target my controls, rather than have something that's kind of too holistic, de-risks to the nth degree. With transaction monitoring focused on whether it probably isn't a risk of money laundering. It means you can build controls that are much more targeted on where you think the risk is. Accelerated repayments. So, are we getting repayments from multiple sources, third parties, things like this? So, yeah, it's the customer demographic, the features, how the product could be used. Those are the three starting places.
Awesome. Thank you, Ash. We have just passed 7 o'clock, so that does wrap up our. No, it's all good. It's all good stuff, Ash. Honestly, but yeah, just a few thank yous to go through before we're done. Firstly, thank you to everyone who is tuned in, both on Zoom and on our LinkedIn Live. Thank you for spending the evening or lunchtime if you're one of our US-based attendees in the audience. Also, huge shout outs go to Alfie and Lucy for being the driving force behind the webinars, getting us all organised and on the call. Biggest thank you of the evening goes to Ash, Emma, Gabriel, Matthew, and Shay, just for sharing their insights with us, contributing, giving up their time to talk through this, and sort of contributing to such an engaging conversation. This conversation will continue in the networking session that will follow this event. Lucy has been sharing the link throughout, so we look forward to actually seeing you all and engaging with you afterwards. And also look forward to seeing you at our next Broadgate Search social event. You can find all the latest news about previous and upcoming events on broadgatesearch.com or on our meetup page that you use to RSVP for this event. So thank you very much, and have a great evening.
Thank you.
Cheers, Mike.
Thank you.
Cheers, guys.